Hello and welcome to TaxVibe, a podcast of the Tax Institute, where we peel back the layers of the Australian tax world. I'm John Storey, your host for today's episode, and Tax Counsel of the Tax Institute. I'm joined by Paul Banister, the Vice President of the Tax Institute. Paul is a chartered accountant and a partner at Grant Thornton, leading their tax division in Brisbane. He has over 40 years' experience working with clients to help them navigate through complex and potentially risky tax and commercial issues. We've invited Paul on the show today to get his perspective on some of the issues that frustrate the process of achieving meaningful tax reform in Australia, what challenges the profession faces, and his wish list for 2026. Paul, welcome to the show.
Thanks, John. Thanks for inviting me.
No problem. Paul, I want to start today by talking about the federal budget, which I know sounds really strange because it's only February and budget night is months away. But there is a whole process that goes into the budget. Pre-budget submissions have only just closed, and the Tax Institute published our media release contributing to that. But I think the process of the budget is contributing to the complexity of our tax system. The budget was meant to be about the financial position of the country, how much we are spending, what revenue are we bringing in, and the Treasurer's forecast for the year ahead. That may have been how it used to work, but certainly since the advent of television, budget night has become more of a media circus. The Treasurer is expected to perform, to make some dramatic announcements, some exciting changes to the tax system. And the media declares who are the winners and losers like it's some sort of game. This has resulted in an enormously complex tax system. There is this constant annual tinkering to our tax system. Worse, sometimes the announcements aren't even enacted, so it leaves taxpayers and their advisors in a sort of limbo. There is certainly no energy put in to holistic reform to the tax system. Would you agree with this? Does the budget process itself make our tax system worse?
I'm not sure whether the budget process itself is what makes it worse. I think it's just the overall political environment that we're currently in, where, as you point out, it's a lot about getting that sort of 3-second grab and getting that sort of impactful sort of short statement. The 3-word slogan that people can recall. Where I've come from over sort of the decades that I've been working in tax. There has been a large shift, and certainly all of our time, by the way, John, television has been in this country. So it's been there. I think it's even all color TV during that in my working career as well. But where it used to be is budget night, and bear in mind it's pre-internet, so there always was going to be there were always sort of big shifts on budget night. That impacted on how people did things. So here we were pre-internet. We would roll up a bit after 7 o'clock at the Commonwealth Government Bookshop, and we'd sit there in the queue, wait for 7:30, and then we would go and pay our money and then run back to our offices and have a look at the budget papers. And it actually was a worthwhile thing to do because, among other things, it took a while for the detail to sort of get to you otherwise if you didn't do that. But there was usually something sort of meaningful in it. These days, with that focus, as you say, on if I call it the show, and not necessarily the substance, where we don't see a lot of things that catch people by surprise on budget night. It's more likely to be a combination of there's been pre-budget leaks that have been well and truly tested through the sort of media and social channels. So it isn't really a surprise on budget night. And sometimes we just simply see a re-announcement of something that's previously been announced. People are already aware of it, and maybe it might be just a little tweak here and there, and we might see some of that in 2026's budget. And I think, you know, uh, over the years, the sorts of things that we've seen on budget night itself, I don't think we're going to see the likes of again. And like capital gains tax itself was a budget night announcement, although it had some years prior been flagged in terms of some tax reform processes. But that was one. Uh, I can still vividly remember Mr. Costello in May 2006 making a massive change to the superannuation system
Yeah.
that effectively moved overnight, and with a transition period over the following 13 and a bit months. So, those things, are very impactful. And I don't sense that sort of thing happens these days.
Yeah, we in the Tax Institute's media release for the budget, we've said that we would like the government to build on the momentum last year, where for the first time in a while, tax reform has made the news. The government announced its proposal to have these productivity commission reviews into the economy. A lot of that focused on tax, and these economic roundtables that have also had a tax focus.
Mm.
So our call to the government has been build on that momentum and let's have some genuine tax reform this year, rather than, to use the word you use, more tweaking. But that begs the question, what is tax reform? What makes a change to our system a genuine reform rather than just tinkering or tweaking?
Yeah, so from my view, if it's linked to the overall national objectives to achieve the and in tax it's both been used for not only economic outcomes but also social outcomes. So if it's linked to that, then it sort of is got that reform banner. And from my perspective, what's real reform? Well, it needs to have those clear goals linked to objectives. It's got to be well understood. Ideally, it's going to be simple, but I think the in this sort of environment where you've got all sorts of pressures that are known and unknown, especially maybe from the geopolitical standpoint, there's going to be complexity. So we've got to expect some, but it should not increase complexity. And the other key feature, and it's certainly in line with the Tax Institute's pre-budget press release, is there needs to be a genuine collaboration with the community to challenge whether the measures are going to achieve what they desire to achieve. And we have, as you point out, we have seen some momentum in that direction that's sort of been building over the last year or so. One of the examples that you didn't mention is the proposed Division 296, which was it's coming up 3 years since that was announced originally. And that aside from the the government sort of maybe rechanging and changing or recasting the objectives of it, there's been a lot of uh, strong input from the community. And given that we've seen things change, there seems to be a government that, at least in some part, has been listening.
Yeah, I remember. I think it was John Howard who said that when people hear tax reform, they mean tax cuts, and I thought that was an unfortunate way to label tax reform, because to me, tax reform, the government and the electorate decide how much they want to tax and how much services they want to fund. It's the best way to do it. That's where tax reform comes in, when you can actually make a change to the system that um, improves productivity or reduces the tax burden because you're collecting it more efficiently. Whereas I think a lot of people just think of it as well, if there's tax reform, how do I get to pay less? Is that a fair comment?
I think it's absolutely a fair comment, and you mentioned Mr. Howard. Well, with his treasurer, Mr. Costello, which sort of from the great tax adventure that they took us on from I think it was 13th of August 1998 was when it was announced, implemented mostly but not all on 1 July 2000. Mr. Costello has been famously quoted as saying, "For great tax reform, you need winners and winners." Full stop. So, that's where like it's certainly has been a truism in the political sense. Perhaps there's many people that's sort of exposed to, say, the corporate sector over the years that could say that that isn't necessarily the case, but perhaps corporates don't vote might be the three-word slogan that you'd attach to that. But I think it's generally um, there'll be some uh, from a to achieve some significant progress on reform. The From a political stance, they'll be looking at that winners and winners and making sure that everyone has the opportunity to go ahead. But even if there is something that normally is winners and winners, there is going to be a change, and any change means people are impacted in some way. So they need to, sell it well.
Yeah, I think not just winners and winners, but sometimes lots and lots of people can win a little bit, but a few people perceive to lose a lot, and it's pretty easy, therefore, to argue that it's reform is bad. When we get it wrong, when reform starts to lag and our tax system grows in complexity, we add provisions upon provisions. We occasionally tweak with older ones, but they never quite go away. Our system becomes really complex, and the burden of that falls on tax advisors and of course our clients. What are some of the big challenges facing the Australian tax profession in the coming year?
I From the way that I see it is there's been not only a substantial movement in terms of, if I call it, the rules and the laws and the like, but there's also been movement in the way that things are interpreted, and maybe a new sort of lens has been put on old law or old interpretations, and call it updating or revisionism or whatever you would like. But there's been some movement there, and that shift and coping with that shift highlights that there's a lot to learn, a lot to know, and it isn't just picking things up from the rule book. It's living it and to applying it in a practical sense. So it takes years to develop and hone your skills, and you're building knowledge and experience and staying ahead of things. It's a constant challenge. So that's probably been a thing for the whole of my career, but it seems to be more so these days. Following from that, when we've got a regulatory environment with new sort of relatively new compliance matters in relation to Tax Agent Services Act and the like. You know, we To achieve a particular outcome, say to help a client through a transaction or to come up with a position in their approaching how something's disclosed in the tax returns, or advising them on some change in their circumstances, it just takes more time to get to the answer these days. And
Mm.
clients aren't necessarily willing to pay for that because they don't see what we see. They don't see that, oh, well, look, there's extra, risk management processes that I need to go through now to make sure that my advice is right. So, that includes, second opinions, whether that's one of your colleagues, if you're in an office like mine, or you go to, a tax expert that you regularly deal with, a barrister or the like, that costs. And that ultimately increases the cost of compliance. So with us as tax advisors, as tax agents, being the custodians of the system, if you like, um, that means that we're sort of in some way increasing the compliance costs just because we need to tick more boxes in our own approaches. And that then leads to, I think, the third sort of more significant challenge is how do we build the future as a tax profession? Is the effort, the risk, the rewards involved in everything that we do, is that something that makes a career in tax genuinely worth pursuing? I think the answer, and maybe I'm biased, but the answer is obviously yes, in my view. Um, but there's a volume element to that as well, as in, are we going to nurture enough people that are interested in tax as a career, uh, versus other options that they have to ensure that we have the capacity as a tax profession to respond to all the mega trends, all the complexity that might be impacting, our clients and the tax system and governments and regulators who want to influence how the tax system changes. And you know that that I think is in particular you know a difficult sort of issue that we're dealing with. And you know the people, organizations like the Tax Institute, we're doing our best to respond to that in terms of education, in terms of creating an environment where people can interact so that we can collaborate and solve some of these problems together. But there's a related to this point, and I said about creating a tax career as a place to be. The profession generally is also, like our overall society, aging population. So people are getting close to retirement. So, there's probably something that we need to do, in particular over the next 10, 15 years to really address this challenge. And, part of the goal of, perhaps tax reform is got to be addressing that.
There's a lot of insights in there, Paul. If I just unpick a couple of the things you said, just to return to the issue of changed interpretation, I guess Section 100A would be an example of that. It was a
Mm,
provision
mm,
that had been on the books for decades,
mm,
and other trust-related measures had been introduced that people largely thought dealt with the taxation of trusts. But the old rule never went away, and as far as I'm aware, it wasn't a government mandate, but it was the ATO deciding that, hey, this provision still operates and perhaps has application to some pretty common tax planning strategies. We've also seen Bendel. The Bendel litigation is
mm,
largely to resolve whether the ATO's interpretation of legislation is the right one. I guess this is an example of the problem of building new rules upon old rules. We've had a raft. This current government has introduced a raft of what you might call targeted anti-avoidance measures, but the old ones didn't go away. So we've now compounding it. And it does leave it free for, as you said, you think you can understand the rules, and suddenly some obscure rule, the ATO or the courts say that has some application. It makes it a challenge.
It does indeed. And I think um, the the particular measures, I won't call them reforms, measures that we've had to deal with, and it's not just current government, it goes back, decades. The um, usual approach is to try and plug holes. It's not to say, well, we have a problem that with the current rules. How should those rules be designed to ensure that that problem doesn't exist, and they also do the job that they were intended to do in the first place? Instead of that, there's um, yeah, fe- measures that have been introduced to say, well, let's fix a particular problem. So we'll put some new rules in place that Um, and like Division 7A might be one example there. Uh, and everyone focuses a lot of effort and energy around understanding what the new rules are, but there might be some other rules that are in place that people sort of ignore. And then down the track, you then say, "Oh, well, what about this rule? They've been asleep for decades, but they actually might have application here." And the um, statements by the commissioner in relation to Bendel, post the full federal court decision in particular about you know don't forget Section 100A. That's an example of what we're talking about. So. Uh, what does it mean in terms of addressing those sort of broad challenges that I mentioned? Well, you know, if you've got an approach or a particular set of circumstances and it gave a particular outcome yesterday, then it should continue to have that outcome tomorrow, unless there's some change in interpretation or change in rules, whether a new sort of ruling or new legislation, unless it's flagged to apply prospectively. Otherwise it just it makes ultimately the system less productive because advisors are um, keep second, third guessing whether or not their advice is correct because they're rather than providing advice in a situation where there's a stable footing, they've now learned that, oh, there's all these old issues there. Are there other old issues that I don't understand or I've never got some experience with that might come back and bite me because I've overlooked that. So they're the sorts of things that really make ultimately productivity and growth, which was sort of the current government's sort of you know or one of their key economic objectives. It makes achieving that in our profession at least very difficult.
Yeah, and another thing I want to just come back to from what you said earlier, the regulation of the profession and the increase in regulation and regulation of tax more generally. We've had a raft of new tax reporting regimes and anti-avoidance regimes that have been introduced. And to tie this back to where we started with the budget, I guarantee we'll probably hear these words on the coming budget night and future ones. That is making sure business pays its fair share, or words to that effect. And the implication behind that is that they're not. And of course, then that butters the public up for increasing taxes or doing something like that. But it also creates this atmosphere that business and their advisors are doing the wrong thing. And as you've said, I think it's a little bit counterproductive because as the tax system gets more complex, as you want to try to impose on business stricter rules, if that's what you want to do, you need an engaged profession that you can trust to give honest and fearless advice. Um, in other words, the government really needs us, but often I think the rhetoric around tax at the sort of public level is that taxpayers and their advisors are doing the wrong thing and aren't paying their real fair share of tax, which I don't think the evidence stacks up to support that.
Yeah, well, I think there's a lot of commentators that have spoken, around that issue, both favorably and unfavorably. And, overall, I think the particular um, angle is not that helpful because it by trying to identify a section of the community is not doing the right thing. It um, it takes away from, I think, what we should be focused on is about all getting better. And if there are um, parts of the economy that are not sort of paying their fair share, well, there's two main reasons for that. One is the uh, the system doesn't operate in a way that requires them to pay a fair share. So that element needs to be assessed and reformed. Or there are, participants in the system that aren't doing the right thing. And, one of the things, around this broad issue that, in the Australian Tax Office is not the only regulator doing this, but, focusing on the broader economic um, outcomes that they're getting from particular parts of our economy. So doing what so-called tax gap analysis and to see whether or not the amount that they're raising is a reasonably sort
Mm.
of accurate share or fair share of economic activity in those sections of the environment or of the economy. So, and yeah, that's certainly not a perfect way of trying to identify whether or not things are right or wrong, but it, I think it has sort of uh, delivered results from the way that the commissioner is reporting it, and certainly no reason to question that, and that, but to try and um, respond with the facts once a particular perspective
Mm.
has caught fire.
Mm.
It people aren't interested in that because it just sort of brings uh, things back to equilibrium. And it means that someone else can't be blamed for a broader problem that we've all got to share in.
Yeah, yeah, that's a great insight. We've identified a lot of issues and made some complaints about our current system. If you were treasurer for a day, what would you do to fix it?
Well, if I was treasurer for the day, I think I'd have a fairly long list of things to consider. So I don't think I'd go anywhere near achieving what I'd like to achieve. But the absolute first priority would need to be making sure that the system that impacts the private business owners, private entity owners, and their entities is fixed. Now, we've currently got a system where it's all way too complex. The commissioner, advisors, everyone's got a very difficult job to do at the moment because we're trying to work with old law that is absolutely not fit for purpose. The number one objective is going to be Schedule 2F. Who would have thought that we would have seen family trust distributions tax taking front page news? But it's getting front page news for very good reason, that we've got some very unusual, very unfair outcomes that are being achieved from straightforward situations that do nothing to adversely affect the affairs of taxpayers as a whole. So we need to fix that. We need to fix it urgently. Overall, we need to look at the other a- areas that where we've got companies and trusts and their owners and controllers dealing with each other, and make that work, a lot more simply. And you know, in that regard, we've got the upcoming High Court decision in Bendel. I think it provides a fantastic opportunity for a rethink. A hasty response might be to just focus on reforming Division 7A. I would not encourage that. I think we need to take some time and think, well, this is Div 7A working for us? And what about 100A, 99B, debt equity rules that are in particular in the private business space, whether or not that those things are working effectively. And finally, I would say that the definitions of residency for tax purposes in Australia need to be considered, and we actually roll out some of those ideas that have been flagged from the from a tax consultation perspective. So corporate tax residency and the individual tax residency, and getting those finally refined and implemented so that we can all get on with life.
Paul, a treasurer with so much focus on small business. I would definitely vote for you as to be the treasurer for a day. Um, Thank you so much for your time.
All right. Thank you. Very much enjoyed it.
And thank you, everyone, for listening to this episode of Tax Vibe. I've been chatting with Paul Banister, Vice President of the Tax Institute and partner at Grant Thornton. If you enjoyed today's discussion, subscribe, rate and review Tax Vibe wherever you listen to keep up with us. If you're interested in being at the centre of the tax conversation, a membership with the Tax Institute could be just what you need. Stay current and connected with tangible real-world benefits. Learn more at taxinstitute.com.au. Thanks again, and we'll see you back here soon.